Okay, we are live. The Prospero.ai stock market live streams. Welcome back as we get all of our loyal viewers rolling on in here. I do want to mention as the stream kicks off today, we're approaching 2,000 subs on YouTube. We're about 20-ish away. So if you're not a sub yet, I'm sure a lot of the people in here this early in the stream already are, but hit that sub button. I'll probably say it a couple times throughout the stream because we're trying to hit that by Christmas. I'm joined here with Matt today. We're going to discuss all of the major stories in the stock market. I've got a bunch about, big tech, a lot of things happening. We got a commitment from a major CEO, Masayoshi Son, for a $100 billion investment into the US AI infrastructure, likely to come out later today. We have a Fed meeting this week. What's going on, Matt? What's on your mind with this stock market?
Man, you and I didn't get to talk before the beginning of this call, and when you said $100 billion investment, I thought you were saying somebody was going to invest in Prospero. I'm like, let's go. Newsletter went out yesterday, and we spent a good amount of time talking about how George and I played the Avgo earnings differently, the Broadcom earnings. He sort of took a conservative approach, and I did something that I almost never do. I swung for the fences, and based on the Prospero signals, and made a lot of money on it. And so it's going to be a good Christmas. And so, but George and I just kind of talked about how he has a process that he goes through. There's certain things that he looks at. I'd say he's done pretty well this year with that process, but he chose not to get into Avgo before earnings, and I did. So we'll probably talk about that a little bit, just break that down and how you can use Prospero signals to make decisions moving forward.
That's going to be a super interesting conversation because I'm sure George will probably talk about the process he always follows, like you say. So, but good to hear that you were able to take advantage of the signals. You've been using them a lot this year with your investing, right? When I've heard you talk about it, it sounds like you really check Prospero almost before any position you take. It sounds like
100%. I would consider myself a swing trader. I do a little bit of day trading if I have time. I have another job, and so I can't look at my stocks all day. But I have been blown away with the accuracy of Prospero's ability to predict stock movements. Whether it's Meta a year ago, Tesla a couple years ago, Coin recently, or Avgo, it's been eerily accurate. And so I look at net option sentiment, upside. I look at social sentiment a lot, making decisions on what stocks I'm going to jump into.
Yeah, that's part of the reason why I love talking about all the stocks on the stream that look at in Prospero, because we have a history now of like showing people, the success that the signals show. But George is in here now. So Matt, I'll let you two kick off the stream today. And let's get into those Avgo earnings, huh?
Yeah. So we talked about on the letter yesterday. We spent time talking about how George and I took very different approaches to Broadcom earnings, and I did something. I told the audience, George, I did something I very rarely do. I swung for the fences, and I was revenge trading a little bit, but the signals looked really strong, and there were a lot of reasons that I liked it. There had been a trend on net option sentiment. It's earlier in the week, December 2nd on Monday. It was down in the 70s. And I watched as it slowly moved up through the 70s, into the 80s, into the 90s right before earnings. Technically, it looked solid. Upside on the app was increasing. Downside was decreasing. And so, man, I took a swing and did pretty well. But then when I talked to you, George, you said, no, I didn't get into it, and I would do the same thing again. I'm like, what do you mean? You do the same thing again. And then we talked about how you have a process. You don't get outside of that process. Did the same thing on AST Space Mobile a couple of months ago. I'm screaming from the rooftops for you to get into that stock. I was right, by the way. But George, once again, said I wouldn't do it. I have a process. And the bottom line is George's process has done pretty well for us here at Prospero over the last couple of years. And so he's the expert. And so, George, talk about the difference between, kind of my approach and your approach, and why you chose not to get into Broadcom earnings. And where did he go? There he is. Why'd you choose not to get into Broadcom before earnings?
Yeah, I mean, it's just, there's kind of a step process, and I'll walk you through it. And we didn't even do this in the newsletter. Like, the step process is, first I'm getting my allocations from SPY, QQQ, net option sentiment. And my allocations were showing that I didn't necessarily want to have that many longs and shorts, right? So once you have a set amount of longs, then you're picking a lot of the times between some great stocks, right? And basically what I was choosing on that end was, between, a lot of my favorites. And ultimately, you might say the same thing about when I was buying Broadcom earlier in this year, or when I was, putting that in my portfolio, or I was putting NVIDIA in the portfolio, and I wasn't putting Tesla in the portfolio. That also looked good in the signals, right? There's a lot of stuff that looks good in the high 90s upside net option sentiment. Trends are very important, and that's one thing that might have tipped the scales for Broadcom, but it didn't. Just because what we're doing is we're layering in things beyond that, right? We're layering in macro, right? And that's what we said in the letter. And basically, I'm saying the way I'm seeing essentially a few things. The way that I'm seeing things with the Trump trade, as we say, especially coin, Tesla, those are very solid with him coming into the office. And then on the other side, we're a little worried about what happens with chips as it relates to China, right? And things with tariffs. And we had said that might happen with NVIDIA, and we already saw a news event around kind of international relations hurt NVIDIA. So we've kind of been right about that already, and we were warning about it. So the thing about Broadcom is not even necessarily that we didn't expect them to do well in earnings. We also saw in an NVIDIA conference call early in the year, one of their best quarters ever, one of their 200% plus year over year growth quarters. We saw Jensen Huang say something about being concerned about China. And even on one of their best quarters, they were down in that announcement. So that's what worries us when we start to have some of these macro concerns, is you can even have a really good quarter and be brought down by macro concerns.
Is there a percentage that you kind of weigh those? Does it feel as you're going into a trade? How fluid is it versus just a set metric as far as how much weight you put on macro problems versus
well, I gave it in that order for a reason, right? If let's say both QQQ and SPY net option sentiment were above 40, I could easily have taken on Broadcom in addition to my other longs. Right. I already had AppLovin, I had Coin, I had Tesla. That's some of the in the same kind of areas, tech AI. I guess Coinbase isn't really in there, but kind of tech. So had that been higher, and that's where I start, I could take that on and take on even, some macro risk. So that's where I start. And then from there, it is really like a lot feel, but it's also like, I'll tell you something that Matt asked me this weekend. He asked me if we could pick a stock in the week. And I was kind of like, no, we can't, because there's a reason I pick a whole portfolio, because there's a whole strategy formed around that. I don't necessarily want to ever just pick one stock, right? Because that's not leaning on the whole portfolio to balance out risk. So yeah, that part is tricky, and we try to teach it, and is very much kind of like built in a bespoke way based on SPY net option sentiment, QQQ net option sentiment, what I'm seeing on a macro level in terms of trends. And yeah, I think that's the difference between, and we say this all the time, there's a difference between portfolio management, right, and stock picking, right? And the app is very good at picking stocks, right? But to take what's in the app and move it towards the kind of, performance that we show in our paper trading, you need sound portfolio management things on top, procedures on top. And that might be the tougher part. That's what Matt's referring to. The tougher part is saying like AST Space Mobile looks exciting, but it's not quite in our risk profile. Yeah, that's the hardest thing to do in investing, and everybody has different risk profiles. That's why when people ask me sometimes, what should I put in my portfolio? Well, my first response is, well, I don't know anything about you, right? I don't know what your risk tolerance is. The worst thing I could give is my portfolio when we might have different risk tolerances.
Yeah, you know, and there's another subject that we talked about very briefly, kind of at the end of the introduction, which is a lesson that I learned the hard way. George, I don't think I've ever been honest with you about this, but what is it? The time value of money. Is that the phrase?
Yes.
Okay. And so the idea is there were folks that were kind of going at you to get into sound, SOUN, back in the day, when it was around $10. And you love sound, you love the company, you think it's got a bright future, but the valuation was really high back when folks were kind of talking to you about getting in it. And so you didn't do it. Well, sure enough, sound went down and has been down for several months, but then recently just exploded, and everybody kind of piled back in. It's like, oh, see, George, I told you. But you talked about how you would make that decision every single time because of the time value of money. And so talk about that a little bit. Like, what do you mean by that? And why should we sometimes not jump into a stock too heavily when evaluations are too high?
Well, it's funny because like I said a few things in that video. I said I like sound long-term, right? And then I said I don't like it at $10 right now, right? And that's the funny thing. All the people like all the I told you soers that came in, it's like they completely missed the fact that I said I like it long-term, right? And 9 months between when I said that in March and when it crossed $10 again in December, it was actually like 95 days in between, or sorry, like it was 3 months and 4 days. 9 months and 4 days. Sorry, a little slow on Monday morning.
Long
So
time.
that's a very long time in investment terms, right? So I did still like it long term, but what I was saying is like, yeah, as the Prospero portfolio was doing well, we were investing in other things, right? You can always come back and get to something later. And that's very similar to what I said with, Coinbase or Bitcoin, where it's just like, I believe in it long term, but right now I like other things better. And that time value of money is so important. That's why the Prospero portfolio does very well, because we're not afraid to look in any given week and say, okay, this week, even though and I think Google is a great example. I almost wrote this, but we already had a pretty long intro, right? I almost wrote that Google is one of my favorite stocks long-term personally, just because I'm interested in what they do. And I think they produce good science. And that's kind of what I'm interested in. And I think they have probably the best commercial science team out there, right? But I didn't own it for large swaths of the year because, there wasn't good news, momentum, things like that around it. And, we did get back in last week, even after a bit of a bump with the quantum announcement, but it's got momentum again. And we're in Google. And that's a big difference between stocks that you might love long-term. And it doesn't mean you have to own them this second. That's the important part about time value of money. And we're just talking about optimizing returns here. What we do is just an example of what I think is the best way to use the Prospero signals to balance risk and reward. That's an important thing about the conversations with Matt, because he's using it in a different way, but everyone needs to use it in the way that they're comfortable with. I think it's probably good to go into this question here, and I can put it up on the screen. And I think if you're a busy person with a day job, the best way to use it is to look at, I either look at our picks, and then short, long, whatever you do. If you don't have a lot of time, I'd steer more towards long-term stuff, right? Because you don't necessarily want the volatility. Short-term is more based on net options, net social. But you can look at long-term picks and also look at, what's doing well in net option sentiment. I always like to say, if net option sentiment is on a good trend up, it's, you kind of can hold a long-term pick with no worries. But if it starts to go down, you even in a longer-term portfolio, you might want to consider getting out at that point. And then the other thing you can do is you can look at like high net option sentiment stocks and like the search on the side, right? And then see what has high upside or high profitability or both of those, and kind of just search that way. I found good picks that way. And then just all you ever need to do is go in to monitor your portfolio, is go in and see what's happening in net option sentiment. As long as it's on an upswing or even out, like I don't think you even really need to think about selling once you're in something already. And then if it starts to go down, I'd say if it goes down, about 10 points from the high, that's when you should start getting concerned. That's when you should start strongly considering selling. If you see a lot of volatility in it, there's some stocks that are volatile in that option sentiment. You could watch it a little more, get a couple more readings, look at that. But that's how I'd recommend.
George, if you don't mind, I'm gonna jump in. I'll give a good example. I just jump into ASML, that company, because it's I look for companies that are quality companies that are good value picks. And talk about value investing, George would be the best one to do that. But I look for good companies that are a little underpriced. Maybe for whatever reason, there was a sell-off. And with ASML, it's a company that in many ways has a monopoly in its area of business. And it was kind of at the bottom of a trend line. It had been declining for a while. I was watching it. And I put ASML on my watch list in the app. And I just watched it pretty much every day, still kind of declining. And then all of a sudden, it kind of baselined, it consolidated, it stopped declining. And then I watched for net option sentiment on ASML to increase. And as soon as it did and started increasing, I bought. Well, sure enough, this week, ASML showed up on our picks, and it's doing really well. And so I look for good entries on good stocks when net option sentiment begins to increase.
Did that answer your question? Hopefully. All right, Matt, anything else, or should we jump into the topic, Stephen?
Let's jump into the topics, man. It's good to see you guys. And hopefully ASTS and sound will do better than everybody's wildest imagination. So y'all have a good time. We'll see you soon.
Thank you, Matt. Great discussion to start off the stream today. Also a great question from Arun. Thank you for joining and asking in today. One thing I wanted to bring up on the stream today is this number I saw released about the S&P Global's Flash US Composite PMI. I think if you're someone who maybe has doubted this bull market the whole way and are wondering why do stocks just continue to go higher and higher, maybe this piece of data we got can kind of give you an explanation of why. So this number tracks the activity in both services and manufacturing sectors, and it came in at the highest level in over 38 months at 56.6. And I believe the way these numbers are work, like anything 50 and above is growth, 50 and below is decrease in the economic production. So does a number like that give you confidence? And does it tell you what I just said, like kind of explains why the market has done so well when these businesses are growing and get you excited about next year?
Yeah, I mean, I think what we're dealing with here is I think there was, some economic issues and then some uncertainty around the election where people didn't spend. But, people expect support for industry under Trump. And so, I think that's a reason to spend. So I think that's what we're looking at. I think that there is, there's a lot of optimism in the market, save like, some hiccups where, might call them corrections. And I think, once there's more solid policy, like we talked about, I think there's every reason to believe the policy is going to support the market. And so I think that's why you have some businesses starting to get a little better with spending.
And another news line I saw that came out that I thought was fascinating, because we've been speaking so much about the space sector recently, and Matt mentioned ASTS and how We were in that and Rocket Lab, and we've mentioned all of these companies. If you're a loyal stream viewer, you've probably heard us talk about them so much. And I really liked how this story has played out, because it seems like we were ahead of the curve on this. We got a news story about how Honeywell is exploring spinning off their aerospace business. It could happen as early as the end of 2025, maybe even 2026. The popular activist investor Elliott is involved in this company, which I've really grown to respect them. The more I see what they've done, like the longer I've paid attention to the stock market, they seem to really be able to get companies headed in the right direction. But maybe Honeywell is seeing, and Elliott is seeing, all of these smaller space companies do so well and be embraced by the market, and now they're kind of want to play it as well. Is that kind of what you see happening here?
Yeah, definitely. And I think I saw Honeywell on Momentum Score last week, and I think I had the same thought that they're having, which is just like, wow, this is a lot of attention. I was like, that's a lot of attention for Honeywell. That's a lot of momentum. So I think they probably saw that same thing and were just like, oh, like if we actually even just break this out into a pure space play, we could get a lot of that momentum, because a stock like Honeywell, with all of its business, doesn't necessarily want to attract momentum. You know, we're talking about just like a very stable business that doesn't want things to go. But if they're just like, hey, like a space stock might get a lot of momentum and a lot of excitement just purely speculating on future earnings, right? Which is what we're seeing in a lot of the other space plays. I think it seems really smart. And I think also it might be something like I'm saying, where the market dictated it. They're like, oh, us as a company is getting enough momentum trades that we never really normally do. You can kind of deduce that's due to space. And that's kind of like the market dictating how it feels about that. And a smart CEO, it looks like, as it takes that very seriously and says, wow, we might be able to do very well if we break this out.
Now, do you think that this is kind of this whole space excitement we've been seeing happening in the market? Do you think it's too early, and that we're seeing this bump, and that maybe it's a little too early? These businesses aren't profitable. Maybe their growth and their actual revenue is a little farther down the road, and we're going to see this kind of fade and then come back? Or do you think this is really the beginning of these companies being able to be viable businesses and, you know, grow and get respect in the market?
I think we talked about it. I think we talked about it a lot, right? And last week. And I think it's just a question of, right, some of these things like space mining, right, is a pretty long tail, right? So a lot of these things, as long as the excitement sustains and people still see that growth and they see like what can be perceived as progress, right, I think these valuations will stay like very frothy. That's the nice thing about a business that's like so far into the future. And like we talk about, like, you know, space tourism might be the first thing, like all of that, like we still have so long to go that all investors that are like trading on this momentum will need is progress, right? Because if you're just like, hey, this business is going to be cool in 10 years, all you have to do is make progress towards that 10 years. Where you really get graded on profits and earnings is where you said, okay, it's going to take us about 3 years to build this business, right? Then in 3 years, people are going to want to see those profits. But I don't think anyone's guiding to profits around these businesses for like, you know, pretty far away. So that's all that it is about, right? It's about managing expectations and hitting benchmarks, right? There will be benchmarks that these companies will have to share in terms of getting closer to, like, you know, space tourism, for example, right? But those benchmarks are not going to need to be profits. They're going to need to be just like R&D goals, you know, manufacturing around that R&D. You're judged by different standards on long-term growth plays.
And we have Leonardo commenting from Austria. All around the world, Prospero has gone. Looks like he did very well on Coin and Tesla, but he's down a little bit on ASTS. Any advice for him?
Yeah, I mean, that's just, you know, too bad you didn't get in on our earlier ASTS things. No, I mean, that's just, these are kind of, a lot of what we do are big, like reward picks that we're managing the risk, right? I think the earnings one, I think maybe you were asleep when we got out, but that was only an 11% loss for us. Not that that matters that much. We want it to be accessible to everyone, but yeah, that's why, like, if you have earnings on a stock that's going to report when you're sleeping, sometimes you might just want to get out just in case that happens anyway. But yeah, I wanted to see what's the rest down. I think this is more of just a comment. Thank you for that. I don't think there's a question there. But yeah, I mean, one of the things we recommend is that, you know, you just get a feel, like, whether you're following everything, and some things, you know, if you have your own process, it's supported by Prospero. And I'm glad you've had some that work. Hopefully that keeps going in the future. Generally, I think people are pretty happy with the picks they get when they're following Prospero. Like, you know, our portfolios seem to reflect that success. But like, yeah, also glad you found us all the way in Austria.
It seems to me from a lot of the comments we get, people love to play earnings. Do you think a better strategy for people would be to say, if you're bullish on a company's earnings, invest in it 1 month prior and sell day of when it's going to report after the bell? That way, maybe you have less reward, but you have less risk. And a lot of the stocks, if you're bullish on them, they seem to run up into earnings if they're going to have good earnings. So what do you think of that? Do you think that's a better strategy?
Maybe. I mean, that's not universal. Like, sometimes stocks can actually get beat up heading into earnings when people are expecting, because funds want to buy it at a reduced price before. So I'm not sure if that's the best thing. I mean, whether or not you play earnings, like, we don't do it. We don't necessarily do it all the time. A lot of times we'll de-risk out of it before. But I think the one thing that's important is that you see kind of like, if you look at Broadcom heading in, you're talking about something that was kind of like in the high 60s all the way up to 90. Like, I think you can feel a lot safer on that kind of move in net option sentiment than stocks that might be like, I've seen plenty of stocks that are at like 80 and they'll go into 88, and that's not necessarily enough.
No, that's a great point. One stock that I was surprised to see is actually red in 2024 year to date is Uber. And I wanted to bring them up because we talked about them before, and I was shocked when I saw that they were actually negative this year. And it seems like their most recent downtrend really started when Trump got elected, and it became more and more clear that Tesla is going to get all these benefits that we've been talking about in the self-driving regulation. Would you be worried as a shareholder of Uber and really any other like transportation related company with how we've been discussing the favorability of Tesla in this next administration? Is it a real concern for these companies?
Yeah, I mean, I think Uber's got a lot of it. Like, I think they have challenges in profitability, right? We talk about this all the time. They don't, like, a lot of their business model seems to involve, not doing things like not paying out benefits. Their margins are pretty tight, and they try to raise prices, but it's hard. And there's some places that, I think when you look at their like approach to like California and that legislation, right? They spent a lot on lobbying to secure their margins. And I always thought that was kind of funny, because I was like, I actually think they would have saved money paying out benefits, even though that wouldn't go, like, it's a different margin. So I do see why they would want it in like, it's an outside payment to lobbyists versus something that directly impacts your profit margins on your core product, which is very important, and they want to protect for their investors. But yeah, they might have just like overspent, because at the end of the day, they might be replaced to self-driving. And, I think a lot of people are thinking what we've been talking about, which is that that the Trump administration could be very friendly to self-driving. And that could really impact Uber a lot in the short term, because it's not just Uber business. It's like Uber Eats too. Like, a self-driving car could be so efficient that it's picking up like an order and just bringing it to your house, and you're going, and maybe soon enough we'll have a little robot that's ringing your doorbell and bringing you the food. That's a lot cheaper than paying a human to do that. So they could be coming for all of Uber's businesses, and they should definitely be scared. I mean, Uber was trying to invest in self-driving for a while, and I think they pretty much, I don't know if they're still doing that, or they might partner with There was a big lawsuit with Waymo at one point. I don't even know. But yeah, like there's a reason that their stock is going down, and people, I would be concerned.
And as we're talking, Tesla's up 5% again today. Stock is at 458. Probably added several Ubers in market cap since the election. Stock is just on a tear. So I just wanted to throw that in there as we're discussing this side of the world in the story. But
yeah, we've been riding it.
Yeah, stock move has been insane. Something that was announced this morning, which I'm not sure exactly when it's taking place today, but I believe there's a press conference expected with Trump and the CEO of SoftBank, Masayoshi Son, and they will announce that, Masayoshi Son will announce that he plans to invest $100 billion over the next 4 years in the U.S. in AI and all the industry and jobs related around it. They expect that 100,000 jobs will be created with this investment. Another bullish story for the AI bull case that we've been discussing. Seems like there's a lot left in the tank for all of these companies. So yeah, how does this make you feel about the AI and AI related industries?
I mean, I've always been bullish, right? This doesn't change my impression that much, but I do think it's interesting. Just talking about, like, I think the difference between maybe someone with a political mindset and why some people like Trump, right? I think this is like, at the end of the day, he, whatever you think about his finances or anything, which people are pretty far apart on, so I'm not really going to touch, but he is familiar making deals, right? I'd say a lot more familiar than the traditional politician. And, I can't recall tons of these, like, kind of country level deals that are just like specifically coming to mind. But I mean, I think that's important. I think if you're looking at AI, like, I think in some capacities, especially defense, I think that China is kind of ahead of the US. So I think partnering with other countries to just like raise our development in AI is huge, right? I think, and I hope there's more of this to come. But yeah, I mean, I think, we talk about it in reference to a lot of things potentially in the Trump administration. But I think, yeah, more country level investment can only help an AI industry that doesn't really need any help, isn't going to need any help, is going to do very, very well one way or the other.
And I saw some discussion going around about how all of the companies that were like the first movers in AI and NVIDIA, maybe their best returns are behind them. And not to say that like people are bearish on them at all, but just that the dramatic upward moves maybe have happened already, and that people were beginning to look at like second derivative AI companies. Do you think that's a good way to think about the space? And like a lot of these software companies that are going to get benefits from AI, maybe they're the next leg of growth in this area. Do you think that's possible?
I think that looking for those second, third derivative things is fraught with risk for everyday people. Like, you have a lot of professionals that are spending a lot of time. I mean, that's pretty much what an analyst is going to do, like full time at a hedge fund, right? And they're spending, I would spend probably like on the value side, this is a lot more, like 2-3 months of work getting to know one of those stocks. That's what you're up against. Like, I doubt you're putting in 2-3 months of full-time work. And that's going to be a huge differentiator, because you dive in on the company, the leadership, the competition, right? So like, my advice, that's one of the reasons that we built Prospero, right? My advice is to leverage the Prospero signals in that kind of thing. It's going to really and wait, like my story with ASTS, right? Wait until it gets to a level that and you're comfortable with before you dive in. Like, to me, that's a super important way to do it, because this is my full-time job, like researching this. I mean, I have a lot of CEO responsibilities, but at the same time, I have a lot more time to research stocks than the average person. And even I'm kind of like, I don't want to get into the pen with these analysts that are going to be able to spend much more time getting to know these companies, unless it checks out and it looks good in the Prospero signals, which we find tons of stuff that way. And that would be my recommendation.
Well, that's a perspective that I'm happy you're sharing because I think that's something only someone who's worked in the industry would know, and I feel like a lot of people don't talk about. So that's cool that you're sharing that. And we got another comment from Leonardo just complimenting, the Prospero signals, how he uses them, how he found Prospero. So that's awesome to see. Thank you, Leonardo, for sharing. Um, Okay, we have to talk about Bitcoin today, George. The rally that never stops. Bitcoin hit 106,000 last night, and it's back up near there again today. I don't know where it exactly is right now, but I saw it was up earlier. Um, bullish industry news about MSTR being added to the NASDAQ 100. So, I mean, that basically means every investor has some kind of exposure to crypto or Bitcoin almost at this point. I mean, so many people on the QQQ. Um, how are you feeling about this space after this rally that we've seen? We've been bullish on it. You've been talking about coin. One thing I wanted to ask is some of the miners seem to have not participated in the rally as much. Maybe they'll be a good way if things keep going in the bullish direction. They'll catch up. How do you feel about that? And how do you feel about the Bitcoin space?
Yeah, I mean, I think I actually saw Hut H mining on the momentum score on, I think it was Thursday or Friday, for the first time I've seen that miner. I've seen Mara a little while ago as it was starting, but yeah, I think I see what I see is a more maturity in this, right? I think that basically what we're getting is people being more interested in things like Coinbase, right? Because it's a little more safer, a little more distributed. I think we see all of these Bitcoin ETFs are becoming more popular. And I think that, earlier in the cycle when there were less options, these public company miners were a better option. But I think a lot more people are looking to ETFs instead of miners because miners are definitely more volatile. And it's also frequently concentrated in one area, one coin. I think a lot of people's mindset is they think there's more stability in a Bitcoin ETF than one of the miners, and that wasn't always an option. And then I think things like Coinbase are doing well. I also think it's getting a lot easier, and people know a lot better how to just buy the coin. I think a lot of the interest in the miners previously was that was one of the easiest ways to go long cryptocurrency without needing to be on a special exchange.
So with the USA holding it strategically, we talked about the story where Michael Saylor recently pitched Microsoft as adding it on their balance sheet, and the board of Microsoft declined. But do you think we'll see a major company take this strategy in 2025? I'm thinking one of the 100 billion plus companies, where whether they put 1%, 2%, 10%, whatever it is of their cash into Bitcoin.
The only thing that might make me say no is it might run too much. Corporate's slow, right? I mean, the biggest obstacle is they might say oh, if it runs to 130, 140, maybe we need to wait for the dip, or that's the problem with a corporate treasury type situation. They might have say, hey, we missed the opportunity. Think about it. It's already it's up almost 100% since the election, right? So any treasury that's doing that kind of analysis, right, they might just say there's too much downside risk with how much this is run up. But I do think you probably have a lot of people talking about it. And what we might need to see, we talk about the speculation versus the legislation, right? I think if we see legislation that's very friendly towards it passed, I think that's when you might see you might just see these treasuries kind of getting ready to do something, and they're waiting for more concrete evidence in the policy. That might be when we see it. But if it doesn't happen, they might just say, hey, this maybe moved past us.
Mm-hmm. So I see a question in our chat from HF. The app signals short-term bull on Occidental. It has a high net social indicator, 99, but scores relatively average in other indicators, 70s. How should this be interpreted?
I will pull it up. So the first thing I'm going to tell you is, and I don't know if you were here, but always look at net option sentiment trending. That's like, especially on a short-term thing, and I'm actually seeing a very positive trend, and you can see it opened at 71 and it's at 73 now. So I'm actually seeing a very positive trend in Oxy. I would consider adding it. But I would also say the danger of high social sentiment stocks, and I don't think this really applies because of what's happening with net option sentiment, is that you can be a little early in the cycle sometimes. That's the one thing. Late in the cycle, right? By the time social sentiment has reached its peak, sometimes the stock's about to go down. That doesn't necessarily mean it, though. That's not a hard and fast rule. So it just makes it a little riskier if it's like a social sentiment dependent play. But no, I like the upside's a little low at 60, but not necessarily low for an energy stock. I don't love energy right now. That would be the one thing. But if you're just looking, all things equal, if you're looking at a net option sentiment trend like that and a social sentiment score like that, you're probably talking about something that has opportunity.
That last point was something I wanted to bring up, and maybe it'll be good for anybody else who's a newer viewer or newer to our signals. What you hinted on, where a 60 in energy space is different than a 60 in tech. I think sometimes people wouldn't understand that when they're first getting used to the signals. If you want to just discuss how that is in Prospero and how, everything we talk about that area.
Well, I think the easiest thing to do is always benchmark a stock to itself, right? That's the lowest lift. Saying like, okay, where were these levels before? Where are they now? That's why the time series is helpful, right? But, if you kind of take it to what it is at its core, we have like net option sentiment. We have upside, downside, like those tend to be, I would say, more sensitive to the sector. And that's because those are options derived, right? And people don't speculate as much as on stocks like real estate, financials, energy. Why? Because those are dividend stocks, right? And you want to own the collateral, because if you own an option when something pays a dividend, you don't get the dividend. You get the dividend if you own the stock, right? So that's why there tends to be not as much option speculation on those. And like, other than what I just told you, like the best thing you can do is look at a few competitors, right? Pull up, you can go to Barron's, you can go to Yahoo, pull up, look at the competitors, look them up in Prospero and just benchmark it yourself. That's the easiest way to do it. That's what I do all the time.
And they said, HF said thank you. So yeah, glad to help you out there. Okay, so a lot of the stuff I'm talking about now, they're setting up for 2025. I feel like that's where all of the investor energy is going now. I wanted to bring up some stocks that might be stock split candidates for next year. Some that I had thought of were Meta, Netflix, Tesla, Broadcom, and Eli Lilly. Are any of those companies the most likely in your mind, and any that I didn't mention that you think will split? And then maybe if you just want to quickly talk about, your opinion on stock splits, if they're actually bullish or not for a stock.
Oh, it's definitely bullish. I mean, but it shouldn't be. It's really funny, especially with fractional shares. They're it's completely not needed. For a while, like it was, right? Because there's some investors that, and this is an extreme example, some investors I see posts online will be like, what's the best stock under $10, right? Because they just want to see that they own a lot of shares of something, which is just like a silly retail like thing. Because like at the end of the day, a stock that's trading at $800 a share, the percent it moves is going to be the percent you gain, however many shares you have, right? So it's a psychological thing. It works to retail because when more people that perception, more people buy it, lead up. So it actually works. More people do buy a stock for that, but it shouldn't be the case. And you shouldn't think like that. You should think what stock I can make the biggest percentage gain on, because your money is your money. And with fractional shares, you should toss out that noise.
And for the companies, which one do you think is most likely? You want me to say them again?
Oh, no, I think Broadcom is the biggest. And I think that's just because like one of the reasons a stock is up there is like Broadcom traditionally is not a stock that gets retail interest. But with this AI buzz, it is. So that's a very, very, I'd say that's by far the strongest candidate. Similarly with Eli Lilly, there's a lot of buzz, I'd say, with especially anything that has like a GLP drug that became more, but we liked Eli Lilly even before that drug came out, but because we think they're well managed and they do good R&D. The other thing that you didn't mention is ASML. I think that's another chip stock that's, trading pretty high, that hasn't split, that is like, it's like even Matt mentioned it. It's a stock that has retail attention, retail interest. Another one that I didn't like say, but I think absolutely with this run, or that you didn't say, that's a little more out there. It's a riskier pick, Palantir, right? I think with this run that it went on, they want to attract retail investors. I think it's gone, how high is it now? I think it's been on a crazy run. I think it's over 100, or it's like,
I think it pulled back today. I think I saw it in the
72.
70s.
Well, yeah, I think if it's over 100, like it keeps running, I could easily see it pulling back, right? Wanting to be at that like $10 level. But yeah, those are my big candidates.
All right, so pin that, everybody watching. We'll come back to it in 2025. We have a question though from Apple Moose. Nice name.
Oh, Tesla is too.
Yeah, Tesla.
Yeah.
A friend of mine is an options trader, and he says I should start option trading too. He wants to teach me. Is this good advice?
I mean, not generally, no. But like, I'm of two minds of this. It's good to learn how to, have as many options, are just tools in your toolkit to move risk, right? It's good to learn, but I wouldn't feel any pressure to act, right? I think that's the big difference. Like, I honestly think most people should be paper trading options for a good year before they ever try to do anything. So I think if you're committed to actually learn, have it be a good process. But I think if you're going to take like a few, lessons and then, jump in, like, and sure, like if you want to jump in with small amounts of money for you, I'm talking about less than 5% of your portfolio, go for it. Take your lumps. The best way to learn is with real money. But if you're taking a few lessons from him, learning sessions and thinking that you want to put in, any kind of portion above 5% to start, learning, getting your feet wet, that is a mistake in my opinion.
And another one from Leonardo. What's the time frame on your growth stock picks? And then he mentions Checkpoint Therapeutics, which he bought 110. When do you look to take profit if he was up 90% at some point?
Yeah, I mean, I think just as a general, like taking gains is very personal. We were kind of talking about that at the beginning, in terms of, what to suggest. I think that what I personally like to do, I personally like to start, if something's up 50%, just like as a general rule, I like to take out about half of my position, right? Just lock in that profit, lock in that gain. Then, also like I would say, like as a general rule, if you get higher than that, certainly like 100%, I definitely want to take out like maybe another like 25% of the original, 50% of the current, right? But there's some people I know that start taking profits at like 20%, right? The other thing that I would say is, for me, it's very signal driven, right? If I see net option sentiment climbing, staying at the same levels, I'll keep holding. I'll maybe even take less profit. We're very much just like in or out, right? With single positions that we're paper trading. But that part is personal. I would lean on net option sentiment, but it's never a bad idea, irrespective of how good the signal is, to just, take a portion of your position and start taking profits on it.
Okay, so I have one more topic to talk about today, but before I get into that, we are approaching 2,000 subs on YouTube, only 14 away. So if anybody in the stream today is not a subscriber, please hit that subscription button. We want to hit that before Christmas, so only 14 away. And the last thing I wanted to get into on today's stream, and now that we brought up this Honeywell story, I'm pulling the strings together. Maybe the company that they're spinning off is mad, and sending some of these drones around our area, George. I don't know if you've been looking up at the night sky. For people who watch the stream, I'm in Bergen County, New Jersey, and I was very doubtful that this was a real thing until about last Thursday or Friday. I started looking up and seeing these things. What's going on here? Is it a defense company, a tech company, testing out new technology? Do you believe in the drone hype that's going on? Explain this. Break this down to us.
I'm going to do a follow-up. I saw Leonardo post one more thing. He kind of said take profit on the way up. I'll just make one ad. Yeah, generally that's a good policy, but the more you can organize it into your own process that feels comfortable, the better. Consistency is what matters. If you always are just getting a feel for it, you might end up taking on more risk than you actually want. So I'd say be organized about it. In terms of the drones, it's weird. And I don't know if it's just a lot more people have cameras and we're getting more evidence, or there's actually more of these military drones around. But if the military is testing things, traditionally they do it far away from people. However, what they could be testing is detection, right? They could basically be detecting their latest technologies and testing, if they fly them in spaces with people, what causes detection. Because at the end of the day, I don't know. It's so hard to do this because at the end of the day, they can give these things sonar, right? And they don't necessarily need lights. So part of me just wants to say, there's a lot of evidence. I'd say that some people think there's proof. I'd say there's a lot of evidence that we might not be alone in the universe. A lot of evidence that we might not, right? It's so hard because there's a lot of in these stories, there's both intentional obfuscation of details, as well as just bad data being thrown in. But it is certainly weird. And I have watched plenty of alien documentaries. It is weird. It does feel like there's just more and more data, that there's unexplainable things. But this particular thing seems so prevalent. I almost think it's more likely that it's China, right? Because if it's the US, it's easy to just be yeah, we're running tests. Sorry, right? And instead, we're getting weird answers, which leads me to believe, I'd say the more likely thing is it's something like China, and they know we're going to be too embarrassed to admit that they're just flying all over our thing and we can't do anything, or aliens. But the whole thing is just very weird, that we don't get good answers on this. And I mean, it's not that weird in that I don't think we get good answers on anything when it comes to the US government. But yeah, it's certainly weird.
I definitely want to bring that up on the stream today because it is weird and everybody's talking about it. So, but I do see a question from Mario about Tesla, about none of their timelines have changed, he says, but the stock has run so much. Is it FOMO? How could you explain for a Tesla shareholder to hold on versus selling after this run?
Yeah, I think we've talked about this, and a lot of it is that full self-driving and the expectation that legislation is going to change, right? I think that's absolutely what we're that's what's running. And that's going to be massive revenue if they can roll out full self-driving, and amazing for their margin, right? Because it's just software that's preloaded in. It's just almost pure profit for them. So I think that's the main thing. I definitely think there's, around that news, been a lot of speculation of how profitable that could be and how successful it could be. But I very much think that's what people are doing. And I think some of it might even be, the Tesla bot. I think some people are just expecting very friendly AI legislation, and they might be building that in too. It might be something where previously, I think some of the worry about robotics is the regulations around them, right? They might see that perhaps by the end of Trump's term, they're selling Tesla bots into people's houses.
So as we get into the model portfolio update, we're about to do the switch over. The QQQ is the only index up over 1%. The Dow Jones is almost exactly flat on the day. Any thoughts leading into your moves today about, How you thinking heading into it, or just same as usual, watching the signals?
Watch the signals. Yeah. I think that as long as especially for Tesla, like net option sentiment it runs pretty high. It needs to be above 90. There should be concern if it goes below that level, but you can always like watch for a day.
All right, so George will do the switch over. Chat, stick with me, and we'll see George on the other side. We'll get into model portfolio update. And I'll update everybody right now, heading into the Prospero app myself, taking a look at the SPY and the QQQ net options sentiment. Thank you for all the comments. Such a good stream today with all of the engagement and questions. Happy everybody's liking the signals, liking our live streams. Good to see the community in here today on this fine Monday morning, although it is a rainy and dreary day where I am at. So the weather isn't great, but what are you going to do? Can't have it all. Okay, so I'm going to take a look at QQQ right now, which I mentioned is the index performing the best on the day, and it is at 50 in net options sentiment. So still in a clearly bullish level. One thing we have been noticing recently in the signals is that the QQQ and the SPY were getting really separated. Seemed like maybe some hedging going on in the SPY. I think it was even down into single digits last week. So let's check it out right now and see if it's still at those lower levels, and if it's going to affect George's moves in the model portfolio today. Pulling up the SPY is at 9, so it is still much lower. I don't know at what point does that start to really become a bearish signal versus more so just a hedge on the QQQ. I guess maybe the QQQ would have to join down there with the SPY, and then we'd know for sure something is afoot in the markets, and maybe a sell-off will likely come. But as of right now, it looks like people are hedging and less bullish on non-tech areas of the market. So I can't wait to see how the sector breakdowns look when George pulls it up today, because seeming like the market is on the back of big cap tech as we end this year. I even saw Microsoft, which we were talking about recently, looking better in the signals. So it seems like a lot of the mega cap tech stocks are rallying.
Yeah. All right. I'm getting everything. How are we doing on SPY and QQQ net option sentiment?
So QQQ was at 50, but the SPY is at 9.
Yep, they're not making us easy.
Continual disbelief in non-tech to end the year. It's how it's gone.
All right, let's see. All right, I'm going to share. All right, 50. Oh, God damn it. I did it in the wrong one.
split between QQQ and SPY net option sentiment range, so we will continue to manage risk around it. This should have us continuing to lean into the large cap growth names we like. Leaning tech and hedge profusely.
See, this is why we're not in Oxy. Look at that energy.
Large cap growth is starting to have quite the trend, but I'd say that the next best sector after this small cap growth. So we are definitely looking at growth companies as the most exciting investments right now. Kathy Wood must be happy.
God damn it. I told myself I was going to do this earlier. Oh yeah, look at that hut gain. Perfect timing. Jazz. I guess I will. I don't know. I think we gotta get even more involved with Goog. It's crazy. Do we grab another hot dare? Yeah. We're doing it. I don't know what TM is. What is MANH?
TM is Toyota.
Interesting. All right.
Manhattan Associates is the other one.
Oh, what does Manhattan Associates do?
Engages in business of developing, selling, deploying, servicing, and maintaining software solutions.
All right. Not doing this. Burned too many times. All right, what do we got here? All right, I think that's all. We're really sector weighted here.
But that's kind of what the net options has like demanded, right?
I mean, yeah,
The way
it's forcing our hand a little. Ooh, Tesla is starting to go down a little bit. Oh, God damn it. Post too long for email. There's no way. Oops. All right, that's all, folks.
All right, when we're back on Wednesday at 3 p.m., I believe we will have the Fed meeting actively going on. So I'm sure we'll talk about that. But until then, thanks everyone for stopping by. We'll see you all Wednesday.